Fusemachines Inc., trading under the ticker FUSE on the NASDAQ, is currently sitting at $2.58, marking a significant intraday surge of 63.61% as of this Monday, February 2, 2026. If you have been watching the screens today, you know that this kind of vertical movement is not just a random fluctuation. It is a massive signal to the market that something fundamental has shifted in how investors perceive this small-cap AI player. While the broader indices might be moving on macro data or interest rate speculation, Fusemachines is carving out its own narrative today with a volume spike that dwarfs its typical daily average. We are seeing over 150 million shares changing hands, which is a staggering level of liquidity for a company that was recently trading under the $2 mark. This intraday performance is exactly why people keep an eye on these specialized AI stocks, looking for that one catalyst that can bridge the gap between a struggling post-SPAC listing and a legitimate enterprise contender. Now, here is the part where the reality of the situation likely exceeds the expectations of most casual observers. The expectation for a company like Fusemachines, which has been under significant price pressure for months, was likely a slow drift toward irrelevance or a desperate need for more dilutive funding. However, the reality we are seeing today is driven by a massive strategic partnership with Modulaire, an IBM Platinum partner. This is not just a press release with no substance, it is a move that plugs Fusemachines AI Studio directly into the IBM infrastructure that the largest companies in the world already use. This creates a curiosity loop for investors who might have written Fuse off as a fringe player. The insight here is that Fusemachines is no longer trying to build the entire ocean on its own. It is now becoming a critical layer on top of established enterprise environments like IBM Cloud and Watson. For anyone looking at the landscape of an individual brokerage or trying to find a high-growth angle through online investing, this partnership provides a level of legitimacy that few small-cap firms ever manage to secure. It challenges the common belief that small AI firms are destined to be crushed by the giants. Instead, Fusemachines is positioning itself as the bridge that helps those giants actually get their AI projects into production. Reflecting on the general sentiment, the common ground for many in the online investment world is that Fusemachines was a risky bet that failed to deliver after its 2025 debut. The stock had fallen over 80% in the last 6 months, and many analysts had a sell rating on the name. People saw the volatility and the lack of historical revenue as deal breakers. But let's challenge that. The deeper take here is that the market was punishing the company for being early to a difficult problem, moving AI from cool demos to governed, scalable production. Most companies are still stuck in the experimentation phase, and today's partnership with Modulaire specifically targets that bottleneck. By integrating with IBM's data and integration platforms, Fusemachines is effectively bypassing the long sales cycles and technical hurdles that usually kill small startups. This is why the volume is so high today. Institutional activity seems to be shifting from avoidance to aggressive accumulation as they realize the company's 2026 growth strategy is actually hitting its marks. If you are following this through a Robinhood app or using a Fidelity mobile app to track your watch list, the price action today shows that the market is finally rewarding execution over promises. The intraday high reached $3.67 earlier in the session, showing that the appetite for this news was even higher than the current price suggests. While there has been some cooling off from that peak, the fact that the stock is holding on to a 60% plus gain in a single session tells you that the floor has likely moved. This isn't just a retail pump. The sheer volume indicates that larger funds are taking positions. When you look at the sector momentum, AI services are starting to decouple from hardware. Everyone has already bought their NVIDIA stock and filled their portfolios with Apple stock, but now they're looking for the software and services layer that will actually monetize all that hardware. That is where Fusemachines fits in. They provide the AI-in-a-box solutions that help a retail company or a real estate firm actually use the data they have spent years collecting. Looking at the business model, Fusemachines operates on a foundation of democratizing AI, but in a very practical sense. They have two main pillars, their AI Studio and their AI engines. Think of AI Studio as the factory and the AI engines as the specific tools for different industries. They have targeted retail and real estate as their primary focus areas for 2026, which makes sense because those are industries with massive amounts of legacy data but very little internal expertise on how to use it. They're not just selling software, they are providing the human capital and the governance frameworks that big enterprises need before they can legally or practically roll out AI. This is a far more sustainable model than just being another chatbot provider. They have offices across North America, Asia, and Latin America, which gives them a global footprint that belies their small market cap. Before this current surge, the company was valued at roughly $45 million, which is tiny compared to the total addressable market they are chasing. Recent stock movement has been a roller coaster, but it's important to look at the context of the last few months. In late 2025, they had a NASDAQ debut that was met with a lot of skepticism. They faced a notice about a late filing in November, which is a classic red flag that often keeps investors away from self-investing in a name like this. However, they followed that up with a $1 million follow-on investment from Consilium Investment Management in December. That was a PIPE deal, and while it was relatively small, it showed that institutional holders were willing to double down when the stock was at its lows. Now, only a month later, we have the IBM partner news. The timeline suggests a management team that is aggressively trying to clear the hurdles and prove their worth. For someone using interactive brokers or looking for investment help on a platform like SoFi Invest, the risk-reward profile of Fuse has completely transformed in the span of a few trading hours. Let's get the community involved here. I want to hear your thoughts on this sudden move. Comment below how many shares of Fuse you are currently holding or if you are planning to wait for a pullback before jumping in. Also, do you think these micro-cap AI partnerships are the real deal, or are they just temporary hype in a crowded market? Getting a pulse on what real traders are doing is always better than just looking at a chart. Past performance for Fusemachines admittedly was rough. We saw the stock touch a 52-week low of 1.45 USD just a few weeks ago. It was a classic falling knife scenario where every small bounce was sold off. But that is the nature of the expectation-reality gap. The market expected failure, so it priced the stock for liquidation. The reality of a strategic alliance with a major IBM player was not on anyone's radar. This is the reality exceeding expectations moment that creates these massive green candles. If you were comparing this to other speculative plays in your individual brokerage, you have to ask if the fundamentals have truly changed. With the integration into IBM Cloud, Watson, and IBM integration platforms, the answer seems to be a resounding yes. They are solving the governance and scalability issues that have kept enterprise AI from taking off. As we look toward the future, there are several catalysts that could keep this momentum going. First, we need to see the first results of these modular deployments. If they can show measurable ROI for IBM clients in the retail or real estate space, the revenue growth could be exponential. Second, the company has mentioned selective acquisitions as part of their 2026 strategy. With a higher stock price, they have a better currency for M&A. The risk, of course, is further dilution. We saw an S-1 filing recently covering a major resale of shares by existing stockholders and the potential issuance of common stock upon the exercise of warrants. This is something to keep a very close eye on if you are into online investing. Warrants with an 11.50 USD exercise price are a long way off, but the 26 million shares registered for resale can create a lot of overhead supply that might limit how far the stock can run in the short term. Comparing this to the giants like Nvidia stock or Apple stock is a bit like comparing a speedboat to an aircraft carrier. The big names provide stability in your portfolio, maybe through something like Schwab Intelligent Portfolios or a set of Fidelity ETFs, but the small-cap AI names like Fusemachines are where the asymmetric returns live. Of course, they also carry asymmetric risk. If the partnership fails to gain traction, or if enterprise AI adoption slows down because of budget cuts, a stock like Fuse can give back its gains just as quickly as it made them. But for now, the momentum is clearly on the side of the bulls. The technical indicators are all pointing to a breakout, with the stock finally trading above its short-term moving averages, although it is still well below the 200-day average. In summary, what we are seeing today with Fusemachines Inc. is a classic example of the market being caught off guard. The expectation was that this small AI firm would fade away after its rough public debut. The reality is that they have managed to secure a partnership that gives them a direct line to IBM's massive enterprise client base. This 63% jump is the mark